Since the Covid-induced market crash at the start of 2020, commodities have had a strong run. This has encouraged many people to wonder if we are in a commodity supercycle. Are we in a commodity supercycle? What cyclical and structural forces are driving commodity prices today and might influence prices in the future? All of this and more in this episode of the Commodity Exchange.
Welcome to the Commodity Exchange, a podcast where we bring to you insights from the world of commodities. Whether you're an investor or just want to learn more about the topic, this is the podcast for you. I'm Nitesh Shah. I'm the head of commodities and macroeconomic research here at WisdomTree Europe.
And I'm Mubin Tahir, Director, Macroeconomic Research and Tactical Solutions at WisdomTree. Before we begin, I do need to state the following. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.
So, a warm welcome to everyone tuning into this brand new podcast. We hope to give you some insights into the world of commodities from the perspective of one of the largest commodity product providers, WisdomTree. Although we won't be talking about product, both Mubin and I work in research and regularly comment on the broad macroeconomic trends that are moving commodity markets. And we will get into the micro too. Commodities are a diverse set of assets, and each commodity has its own specific story to tell that sets it apart from the rest of the group.
Excellent, Nitesh. Since this is our first podcast, as you said, why don't we start with a quick introduction about ourselves, tell our listeners a little bit about ourselves. So why don't you tell everyone a little bit about your journey and what has brought you here to talk about commodities today?
Yeah. So I started my career about 21 years ago as an economist, and I'm an economist by training and background. So I worked in the economic research departments at an investment bank, at a research consultancy, and at a rating agency in the structured finance groups. However, I've been at WisdomTree for the past 10 years. WisdomTree is an exchange-traded product provider, and we offer one of the broadest ranges of commodity exchange-traded products in the world. It's a privilege for me to head the commodity and macro team here and work with great analysts like Mubin. So Mubin, how about you give yourself a little introduction yourself?
Sure. So I started in the finance industry around 10 years ago in the field of investment consulting. After initially being a consultant for pension schemes, largely I moved towards research, and then a bit over 4 years ago moved towards research in the ETF industry. I find myself captivated by big picture trends that move markets, which is why I find commodities very interesting, because each commodity brings with it its own unique story. So with the introductions done, Nitesh, what we want to do, of course, is start each episode with a quick recap of what's been happening in commodity markets. How about you take us through some of the most interesting recent developments?
Yeah, and given it's our very first one, I may go a little bit more longer than a month look back that we hope to do in most episodes. But I think it's nice just talking about some of the things that we've seen during the course of this year so far. So in January, we saw the commodity markets open up with a lot of enthusiasm around China's reopening. China announced its reopening back in November of 2022. But the market was really absorbing that information and putting it into price action by January. However, by February, and clouded a little bit by the Chinese New Year and the lack of data that you get around that period, a lot of pessimism set in. people became a little bit more skeptical about how much China would change. China's reopening would change the fundamentals for commodity markets. And just to bear in mind, China is the largest commodity consumer in the world. Um, and even though we started to get some nice prints of data coming out from China, emphasizing its consumption of energy was very strong, its consumption of metals was on the pickup, that pessimism was there. And what a lot of people started focusing on was the rest of the world and how stubborn inflation rates are forcing central banks to continue to tighten monetary policy. And with that, commodity prices fell as people started to price in a softer economic picture for the rest of the year. But then things really shifted this month in March. And really, the big catalyst was the banking crisis with the collapse of SVB Bank and the shotgun marriage of Credit Suisse and UBS. I think the market has become a little spooked, and with financial conditions seeming to tighten up on the back of risk coming off, we are seeing that a number of commodities, especially the cyclical commodities, are seeing their prices fall away. It's at the same time that central banks haven't really meaningfully changed their rhetoric around tightening rates. And in fact, we've seen all the major developed central banks who had been tightening for the past year continue to tighten during the course of March. Now, one of the standout performers in amongst all this chaos has been gold. Gold is quite different from most of the commodities. It's the least cyclical and it's very defensive. And in this period of uncertainty and a risk-off mode, gold it has done well, as it typically does. Now, in the last week or so, we start to see the dust settle a little. The panic that was taking place a couple of weeks ago seems to be subsiding, and with that, we are seeing a number of commodities increase in price, and the markets are starting to relook at some of the fundamentals. For example, we saw some good numbers last week from the US in terms of petroleum product inventory drawdowns. Also, in metal markets, inventory of metals in Shanghai, which had been rising for the past several weeks, in the last week or so, has started to see its numbers ease off. So commodities, the fundamentals seem to be looking like they're improving, and they're shining through some of the fog that the banking crisis has presented. So I guess that's generally, an idea of what's been happening over the last few weeks. I don't know, Mobeen, if you've got any comments or observations on what you've observed over these last few weeks.
It's very interesting you mentioned the developments in the banking sector, Nitesh, here in a commodities podcast. And that's the very interesting thing to observe. The recent turmoil in the banking sector and its effect on commodity markets is a great reminder of how diverse the commodity basket is. And while some cyclicals like industrial metals and energy were initially weighed down, like you said, of course, defensive commodities like gold were actually pulled up. So very interesting to draw that connection between the banking sector and the various fragments of the commodity market as well.
So I think we can move into what we consider to be the main segment of our podcast. And as Mobeen highlighted earlier on, the topic of consideration today is commodity supercycles. So Mobeen, maybe you can tell us what is a commodity supercycle, and have there been any in the past?
It's a very interesting topic to talk about, Nitesh. Supercycles really are long-term trends. And when we talk about a commodity supercycle, we're talking about a prolonged period of high commodity prices. Now, most people who have had some exposure to finance or economics are familiar with the idea of a business cycle, whereby the economy goes through these phases of expansion and contraction. But super cycles, in contrast, are relatively less understood phenomena. They tend to last for prolonged periods, often a decade or more, and therefore are less frequent compared to business cycles and are often driven by quite unique drivers. So, take for example, in the 1970s, when in the US the gold standard was suspended, dollar depreciated meaningfully, and there was high inflation. And alongside that, there was a strong demand for commodities, particularly defensive commodities like gold. And this was further exacerbated by an oil price shock driven by geopolitics. So, even at a time when there was a strong run in commodity prices, different commodities were being driven by different forces. Most recently, between 2002 and 2008, we've had a boom in commodity prices. Many people often refer to that as a super cycle. This boom was driven by strong demand from emerging markets, particularly China. And of course, it was brought to an end by the global financial crisis. So, very interesting to note that the drivers can be different, not just from one super cycle to another, but even within a super cycle, the drivers for different parts of the commodity spectrum can be quite different. Your thoughts, Nitesh?
Yeah, I agree. I mean, commodity super cycles are those phenomenon of undercurrents that supersede business cycles. So there'll be many business cycles inside a single commodity super cycle, and there's some interesting research out there. One piece in particular that I like is called "Super Cycles of Commodity Prices Since the Mid 19th Century." You know, it's a working paper by the UN, and that looks at some of the cycles that have occurred in the last last century or so, and you can see there was one starting in sort of 1894 to 1932, another one 1932 to 1971, 1971 to 1999, and then one from 1999 to that 2000 period that you were discussing. So these are cycles from peak to trough, the full cycle. So there's an up phase and there's a down phase of those. The in the full length of the cycles are in those sort of regions of 20 years, 30 years, as you say, they're multi-decade type of things. And the upswing and the downswing, they don't necessarily mirror in equal length or so, but they can be once again very long. So some of those up cycles, maybe a 20-year up cycle. So a couple of the key things is that with these super cycles occurring, just focusing on the single business cycle trends that we see on a day-to-day basis, based on current strength in economic demand, maybe missing some of the picture when you look at broader commodity markets.
Nitesh, any investor, anyone with an interest in markets wants to identify long-term trends as early as possible. And of course, people have been observing that we've seen good performance in commodity markets in the last 2 years, maybe even 3 years if you start from March 2020. So the question naturally arises, are we in another commodity supercycle now?
That is a great question, and I completely concur that last couple of years have been very strong for commodity prices. Last year, in particular, 2022, when most other asset classes, especially cyclical assets, were posting double-digit negative returns, commodity was posting double-digit positive returns in percentage terms. So, that is it is huge, and the as you state, is that a signal that we have already started this super cycle? Well, I believe we have all the ingredients in place for a super cycle. But it's a little bit questionable whether that's already started yet. Now, let's look at that first point. What are the ingredients for this current super cycle? Well, past super cycles have been driven by specific demand shocks. And what we've seen is that supply has had a hard time catching up with demand for a number of years. That accounts for the upswing part of those super cycles. Today, we can see one of those catalysts, and that's the energy transition. So moving away from the burning of hydrocarbons to produce our energy needs towards renewable sources of energy, and all the infrastructure that supports renewable sources of energy are likely to really fuel this super cycle, and it becomes very metal intensive, right? To produce solar panels, you need silver to produce the batteries that are needed for harnessing the energy from renewable sources of energy and release that energy at a point of where the demand is, requires things like batteries, which are high consumers of everything from nickel, aluminium to cobalt and lithium. So metals are definitely one of the big beneficiaries of this energy transition. And what we have observed is that miners of most metals haven't really moved the needle much yet. So even though demand for these metals, and in the case of nickel, aluminium, copper, we are expecting the markets to at least double in size in terms of demand over the next 2 decades. But yet the supply is unlikely to keep up. So that is very, very strong for the metal markets, because prices just have to rise to plug the gap, as we've seen in the previous super cycles. But at the same time, there's also an underinvestment in traditional hydrocarbons like oil and natural gas, and we're probably going to see a supply destruction in those other commodities at a faster pace than their demand is declining. So we remain quite optimistic on that front. Other areas like agriculture also are part of the energy transition, as increasingly large number of agricultural products are used in renewable fuels. So that's getting another tailwind. So in many ways, we've got a super cycle here that's slightly different from others in the past, that is slightly focused on a slightly more narrow band of commodities. But the fact that there's been underinvestment in other commodities means that we could see a large number of commodities simultaneously rise. Now, are we there yet? I'm not sure. The last 2 years, which were stellar growth years in commodities, were driven by a number of single shocks, which weren't necessarily related to the energy transition. Although the most recent one, the Ukraine war, the reaction to the Ukraine war is for the European Union to wean itself off Russian hydrocarbon dependency, and therefore kind of fits nicely into the energy transition, but it wasn't necessarily by design. I don't know, Mobeen, if you have any views on whether we've already started this super cycle.
It was very interesting for me to hear you mention agricultural commodities there, Nitesh. It reminded me of how we can use agricultural waste in renewable fuels, as you said, to produce things like ethanol. We know that you can use crop residue from corn and sugarcane to produce fuels like ethanol, which get used in transportation and a whole host of industrial applications. A very interesting example of this circular economy model where you can take waste and produce energy out of it. So yes, I concur with your views. It's exciting time to be following commodities, but of course tricky to make that long-term call. But of course, it's easy to identify and recognize that these trends are certainly starting to take off.
So this is, we talked a lot about the super cycle, which which is unfolding probably as we speak, and they will last for decades. But this year, 2023, commodities and the tail end of 2022, commodities have been under some pressure from cyclical conditions. What are some of these cyclical conditions that we're facing, Mobeen? I don't know if you can go into a little bit of detail there.
Yeah, so of course, commodities are still a cyclical asset class. And even though we talk about super cycles, we talk about these long term trends, of course, at WisdomTree, we are excited about the energy transition and its effect on the commodities markets. But commodities aren't immune to what central banks are doing. They aren't immune to recessionary fears. And of course, with the Federal Reserve and other central banks being on this aggressive policy tightening path, as they have been for most of last year and continue to be this year, risk sentiment broadly has taken a hit. Growth stocks were hit, and so were commodities, especially sectors like energy and industrial metals. The other thing which also relates to that policy tightening is what happens in terms of the US dollar. So most commodities are traded in US dollar terms. And typically we see that when the dollar appreciates, which was the case for most of last year, demand from buyers of these commodities tends to go down. That's why we tend to have this rule of thumb that when the dollar appreciates, commodities tend to go down. And lastly, of course, we've had lockdowns in China, which put a further dent on the demand for commodities. But that's an interesting point because you mentioned in the beginning, Nitesh, China being an important driver and the reopening of China being an important driver. I've mentioned it here as a headwind for commodity markets for several months, particularly for most months in 2022. But here in 2023, everyone's talking about the reopening of China and what that means for commodity markets. So, talk us through how important is the reopening of China for commodities and maybe which commodities are most impacted?
Yeah, I think a bit of context here is useful. China is the largest consumer of most commodities. If we look at copper, zinc, lead, aluminium, China accounts for at least 40% of the consumption of those metals. That is huge as a single country consuming that much of each individual metal. And so while most of the world, which reopened after COVID, sort of in the middle of 2021 and 2022 was probably the nice clear year of full economic throttle for most other countries. China was closed, and so while commodity markets benefited from the opening of all these other economies, it didn't have the participation of its largest consumer. Now China is reopened, so that's got to be big for commodities, and assuming China maintains its traditional role in global markets, and remains one of the largest manufacturers for the world, that's going to be very positive for consumption of commodities. But the story is a little bit nuanced. So China is also contending with a big real estate fallout, and that had been dragging its economy. Real estate is also a big consumer of commodities. Think about all the steel structures that need to go into building a property, the cement and all those sort of things. Now, combined with the China reopening is also government support to the real estate sector. And it's not going to be delivered in the same way as some of the stimulus we saw back in 2008, which really saved almost the global economy from implosion. Back then China went all out on a sort of real estate stimulus. Right now, I think China is what it wants to do, at least achieve, is half-finished construction projects should come to completion, and be sold off. So at least salvaging off some of the the best, some of the better projects. Now that is actually very beneficial to certain metals like copper, for example. Um, when a property is just about to be completed, that's when you put the wiring in. That's when you put the pipes in. That's when the white goods come in. The washing machines, the refrigerators. They're all base metal intensive. So that's a very positive thing from that standpoint. Now, looking at the data, since since the beginning of this year, as I mentioned earlier on, you have this little fog period around the Chinese New Year when the data is not printed at the right frequency, and the Lunar New Year doesn't happen at the same time each year, so the seasonal comparisons are quite difficult. But the data we've gone since then shows that the purchasing managers indices for the manufacturing sector has been growing strongly and has risen above the 50 demarcation between contraction and expansion. So China is an expansion on manufacturing purchasing managers indices. And in fact, it hit a 12-year highest level since 2012. Which is a momentum gauge. It's not saying manufacturing is at the highest level since then, but it's saying the momentum offered in the industrial sector is at a 12-year high. One thing that's probably going to drag China a little right now compared to last year and the year before is the fact that the other countries are slowing down in terms of growth, and that does slow down China's exports. So China being a big manufacturer for the rest of the world, that's that part of the story adds a hint of weakness at this point in time. And as we talked about earlier on, central banks of many developed world countries are actually, raising rates, tightening monetary policy. That adds a little bit of risk to the Chinese export sector. But from a domestic standpoint, China seems to be roaring at this point.
Nitesh, it was interesting to observe that people probably got very excited about the China reopening story at the start of the year. A lot of excitement about what impact that might have on certain commodities like copper, as you mentioned. And then maybe in February, people got a bit disappointed because the data just wasn't coming through as much as they were hoping for. But now, like you said, things are beginning to materialize, the data is starting to improve, and expectations are beginning to come to us a reasonable level, which is in line with the idea that the China reopening isn't something that's going to happen over a span of days or weeks. It's a story for 2023, and economic data can't just suddenly become very good over a few days. It unfolds over months, and we're starting to see that in effect with some of the indicators like you mentioned. So I suppose more to come on the China reopening story in the coming months would be the key takeaway. Would you agree?
Yes, I think so. I know China's offered some relatively modest growth forecasts for this year, or targets for this year, but in true China fashion, the targets are one thing, what it delivers maybe another thing. So it's good to it may in fact beat on those, but moving back to sort of our earlier topic of the energy transition. Uh, I briefly outlined some materials that are likely to benefit, but I mean, I don't know if you can give us some more detail. What in your opinion are some of the key commodities that are going to be the main beneficiaries of an energy transition?
Sure, Nitesh. So you mentioned copper. Certainly, that is the first one that immediately comes to mind. Take the example of an electric vehicle. An electric vehicle has 3 to 4 times more copper compared to a similar internal combustion engine car. Now, wherever there is electricity, as you said, whether it's white goods installed in homes, wiring, uh, or energy transition applications, wherever there's an electric current going through these applications, there is probably copper. Copper being one of the best electrical conductors in the world, and because of its physical properties, very malleable, can be used to make wires. So in the energy transition space, renewable power generation, energy distribution, in terms of the grid, and of course energy storage, all of these things are very copper intensive. And then ultimately all the applications like electric vehicles that will use all that renewable energy that we are producing. Other metals that come to mind are nickel, aluminium, zinc, tin. All have very distinct roles to play in the energy transition, and I suppose they could all form topics of future podcast episodes. One thing that's very interesting in this discussion about each of them having unique roles to play in the energy transition is because each has a very unique set of physical properties. It is very difficult, if not impossible, to substitute one for another. We hear about the use of nickel in batteries, for example, but we hear about the use of aluminium not just in batteries, but we also hear about the use of aluminium in making the cars and the trains and the planes lighter and safer, potentially as a replacement for stainless steel. So aluminium will have a very different role to play compared to nickel in the energy transition, and same is the case with zinc and tin and so forth. So those are some of the obvious industrial metals which people are familiar with. But Nitesh, maybe before we close, it would be interesting for our viewers to just hear a little bit about some of the precious metals that have industrial characteristics as well, and potentially have a role to play in the energy transition. Would you like to shed some light on that?
Yeah, absolutely. I guess one of the big precious metals that comes to mind is silver. It's used heavily in photovoltaics, so the solar panels, which is one of the fastest growing sources of renewable energy. And you'd look at the silver market, maybe say 10 years ago, where photovoltaics were almost like a footnote in terms of their in terms of its overall demand usage. But now photovoltaics are acting like with a bigger proportion of demand, completely having superseded the silver that was used in, say, photography, for example. That used to be a big thing back in the days when people used to use film negatives, in 35mm films. So silver is a big thing, but also when we think about energy transition, it's not just electric vehicles that are offering reduced greenhouse gas emissions for our transportation systems. We will need many solutions, including hydrogen fuel cell vehicles. And platinum, or the platinum group metals, are quite important here because they can act as a catalyst in electrolyzers. So the electrolyzers are used for making the hydrogen in the first place. And hydrogen can be made in very green ways. So we can use renewable sources of energy and use hydrogen as the energy carrier to store that energy and put that into hydrogen fuel cell cars. And hydrogen fuel cell cars also use a little bit of that platinum in their in the fuel cell itself. So there are many different avenues for actually consumption of precious metals in this energy transition as well. So I think we've covered quite a bit here in our first episode, and as Mobeen, you mentioned, I think we'll be drilling into some of these segments that we've touched on very lightly today in future episodes. But I think we're nearing the end of our time. I'd say the key takeaway for our listeners today is that commodities are influenced by a strong undercurrent, and that undercurrent is called a supercycle. And it's not obvious that when we're in the upswing of a supercycle phase, and very often we find out almost after the fact. But business cycle activity tends to dominate short-term moves in commodity markets, and it's much easier to identify them and all the push and pull factors that the business cycles have on commodity markets. But if you are an investor or someone who's looking at the commodity markets with a keen interest, with a strategic allocation, you'll be wise to keep an eye on some of these longer term cycles, because they can either propel or detract from your performance for the course of many years, in fact decades. So I think that's one of the big takeaways I would like already to take away today. I don't know, Mobeen, if you have any takeaways you would like to highlight.
I'd say, Nitesh, commodities are an idiosyncratic bunch. Each commodity has its unique place in the world that we live in. And it seems like commodities have announced themselves once again in recent years. So it makes sense for all of us to learn about them or relearn about them and why they matter to us and the world that we live in. Great. Well, thanks everyone for tuning in. We hope you've enjoyed this podcast of the Commodity Exchange. If you want to hear more from us, please subscribe on whichever platform you're using. You can follow us on Twitter at Nitesh Shah WT and at Mobeen Tahir WT. And if you want to learn more about commodities, visit WisdomTree's website, where we have a wide range of research materials and insights. So until next time, take care.